there's two second streets. There's one on Guadalupe and then there's one that way. Yeah. Huh? Yeah, the one on Guad.
Saying that I'm not trying to make any left turns, bro. We're about to go donate these clothes. Give them away. We finna start shopping. Get some new shit. And yeah. It's closed.
Yeah, I already showed them.
Alright, let's get in the car. I want to focus today on candle formations and liquidity, right? So I want y'all to start this is like bare bone basics, but I'm going to give it to y'all in a way where there's actually like some stuff that people don't necessarily share in this, right? The higher the time frame, the more power it holds, okay? The bottom of this candle, the top of this candle, this was August 8th is what we're going to be speaking on. This is a bullish candle right here, which means it's buying price action. That means price opened. It's placed lower to create a wick, then created the body of the candle, and then closed, okay? So that is the formation of a candle. Now, the reason I mapped this out right here, the bottom and the top, is because inside of that candle on the daily is multiple other candles on every other time frame that's lower than the daily. The amount of candles in between that create that daily candle is proportional. So it's like the number, whatever it's supposed to be. So when you go down, then you just have more and more candles between where that candle for the daily started and when it ended.
And that is you finna crash.
Huh?
Finna hit someone with this shit, huh?
What's that other shit out? Like nothing you say staying in the video.
Oh shit.
So you just stop horrifying me.
Who's horrifying?
What we gonna buy, bro? We need to start dripping out, chat. Like it's been 3 years of what?
3 years of no drip.
Of no drip, just being in the room, locked in, bro. It's time. So we gotta. How much of my stuff did we get rid of, bro? We got rid of like half, more than half of my shit.
All those black bags are just full of
Yeah.
clothes we're giving away because now we're gonna be upgraded.
This one is not my size. This one is too big.
What size is that?
Hold on. 44.
Jeez.
I told you.
Do they have good shoes here for decent price?
Yeah. Sometimes you gotta find it. Like,
But I need like fit shoes, like not Nikes and shit like that. You know what I'm saying?
This one is not worthy.
Can you get in here? Telephone number? Let's just look around. I have a meeting. 3:05. Yeah, let me give him a call real quick. All right.
how much is that meeting? How much is that? 60? Oh shit. I thought these were a different kind of shoes. These are the shoes I'm talking about.
What's that?
Amiris.
200? You're bugging.
Bro, I saw them from the corner of my eye. I'm like, are those the shoes I'm thinking about?
We'll come
Yeah.
back. We'll come back.
They have Babesters.
Small things, or that was like easy money, and I want to. Looking back on my cousin, he's been doing it for 3 years now, and he's starting to like make a lot of money from him, and he was like, it just the process of day trading helps build character, helps build like discipline, and a lot of these other attributes that I really want to build up on my personal self. So I was like, why not try day trading?
But you need to understand how a market moves. So market moves off of liquidity, which are areas in price where orders are resting, or there's like a lot of money in that area, right? We obviously can't see the money. We can only see the sticks and the candles, right? So a very good rule of thumb is that liquidity lies at highs and lows of the market. Here we go, a high, right? I'm not gonna go too in depth. As you can kind of see, it just looks like a high area of the market, right? So highs, lows, and whatnot, right? So how can we kind of see how market is moving based on these areas? Let's get a good example going for y'all. So like right here. So as you can see, we had a low in the market in which price ended up retracing to, and depending on the pairs you use. So right now, this is the S&P 500, the top 500 U.S. stocks price action averaged out. They tend to move in certain patterns or in certain ways that you will get used to as you trade more, right? As you get more experience. So the reason I'm saying this is because you're not going to find a lot of these examples as I'm trying to show y'all on these higher time frames because they're swings and you're trying to take advantage of them when they do show up. But when you go into lower time frames, you will see them a lot more. We had a low in the market that was printed. Price followed up by rallying up, came back to this low, this area, swept it, and continued to push up, right? So in this area, we had a lot of resting orders. We had a lot of money just sitting in this area. Price came back down, took that money, and continued pushing up.
I'm never wearing it.
Just follow G. You want that bin?
I didn't buy that one.
This is tough, but it's $23, man. You gotta put this kind of fit on. I'm hungry. Where's your car? Oh yeah, where's me there? I'm trying to go get this nigga me there. Me there, they're going. Yes.
So whenever price does not actually run the area of liquidity, but gets really close, it creates something called an equal high. Let me get a tool so we can draw this out. So when we create a wick high, oh gosh, that is so ugly. Let's fix that color and everything. Brush. Okay, I'm just gonna leave it. So boom. So when we create this high, this top wick, right, just look at it as a line, right? And then the next one is kind of like right here. It's not actually at that top. This area of liquidity becomes stronger, right? Because price tried to get to there, it tried to sweep it out, but something stopped it from happening. Whether it could be some form of news event, and also, by the way, to answer here's previous question, news events also move the charts, but it's also part of price action, which means like the price action is also respecting a lot of the news events. That's why I told him, that's why I said pay attention to the price action mostly, because it's going to tell you the story, right? News events is part of price and why price moves. So we don't really have to be reading up on it and stuff like that because it's going to show it to us on the charts. Does that make sense? Good. All right, so boom. So like I said, so this area becomes stronger now because price wanted to take it. There's a feature on TradingView. You can see this plus button on my right where you can go ahead and add a alert just like that. So as you can see, this line is now made. So how can we use this to swing trade? Very simple, guys. So we put our alert at areas of liquidity, kind of like right here, right? So remember, when price is printing, you don't have access to all this other information. So it's going to look something like this. You can only see this high right here. You don't know what's happening next, but you have your alert set. So when price ends up running this high, which means, again, only this much has printed so far, right here. So boom, we end up taking this high right here. You're now like, okay, boom, what I was looking for, my key level, my area of interest has now been hit, and look for if we can trade. So in this situation, because this is a 1 hour chart, it means every candle here is printing in 1 hour, every 1 hour. So this hits, let's say it hits super early on in the hour, you know, you're swing trading, you're at work or you're doing something, your assignment or whatever, you just know, okay, boom. So one, price has already hit my level. Now you can kind of set a timer on your phone or just be noticing and waiting for that kind of, for this candle to close. So let's say it hit at 5 minutes, means you have 55 minutes left for this candle to show you what it wants to do, right? So getting you hit your alert, now you're on standby. You're not really looking at the chart still. You're just knowing, okay, my area's been hit. 5 minutes, let's say 5 minutes before this candle actually closes. Now you pull up the chart again. You're like, okay, boom, we see we took that high, we started displacing, we're starting to print the body of the candle as a sell, as a bearish candle, right? A sell style candle. What can I be looking to do? I can be waiting for this to confirm the rejection. Just because 5 minutes went in and the candle is now bearish or the candle is now down, that does not mean the candle will stay down. Anything can happen. In a minute, in 2 minutes, that candle can flip bullish again and now break your area of liquidity. And now you've confirmed price in the opposite direction, something we're not talking about right now. We're only talking about reversals. So what we're looking at right here. So boom, 2 more minutes, 1 more minute, 30, 4, 15, 5, 8 seconds, 4, 3, 2, 1. Candle closes. We can look to take a position right here, have our stops above the highs. Again, I'm not going into depth on where to put your stop loss and stuff like that. I'm just letting you know kind of how things are moving. Have our stops right here. We're risking around $100, whatever. We have an area of liquidity right here, a swing low. We have another one right here, another swing low. I mean, not swing low for Naheem. Naheem, ignore what I'm saying right here. But a low, and then another low right here, right? What could we be looking for? We could be looking for price to take this one, or all the way down here. But as we can see what happened, it does not fully run. This is where greed and your system comes into play. Like I told y'all, so your system will be predefined before you even enter the trade. Let's say you only trade 1 to 2s. Boom. Right here, right? You would have ended up winning this trade because of your predefined system.